in light of such a tragedy here, of course, we cannot ignore the human impact to this story. But give us a little bit latest on what you're hearing on the ground and what likely impact this event could have on the economy, especially when it comes to tourism.
Good morning. Clearly, this was a horrific act which is beyond comprehension, with a terrible loss of lives. However, I think one thing that must be said about the Sri Lankan economy and the Sri Lankan people is that they've demonstrated a great deal of resilience. We went through a 30-year civil conflict and came through it. We've had 10 years of excellent peace and stability in the country, and this was a bolt out of the blue. Clearly, there will be an impact, but as I said, these types of terrorist acts is something that the Sri Lankan people have had to experience in the past, and they've shown a great deal of courage and resilience in dealing with it. And the Sri Lankan system is capable of responding. And I'm sure already we are seeing a great deal of normalcy. The central bank is working. Our payments and settlement system, our international operations, our domestic operations are all running. The country's financial system will work through the day-to-day. So already things are normal in terms of the everyday operations of the country's financial system. As far as the economy is concerned, I must say that again, over recent months, we've seen the resilience of the Sri Lankan economy. Last year, like a number of economies with current account deficits, we did experience a great deal of stress in the external account. There were capital outflows. The rupee depreciated by 16%. However, a mixture of remedial action taken by the authorities, the central bank and the government, as well as a more propitious external environment, has meant that in the beginning of this year, we've seen a significant turnaround. The trade deficit has halved. The rupee has appreciated by 4.5%. Inflation is right in the middle of our 4 to 6% target. The government's fiscal consolidation program has remained broadly on track, and the government has introduced a budget in an election year which is very much within the set-out framework. This has meant that we have been able to reach staff-level agreement with the IMF on the extended fund facility, and we expect the IMF's executive board to pass the fifth review of the facility in the middle of May. So things were very much on track. But as I said, over the years, the people of this country and the economy have shown a great deal of resilience, and I'm sure we will do so again. And we have already seen a significant amount of normalcy return. Clearly one...
Governor?
Yes.
If I may jump in, Governor, you talked about how there will definitely be an impact. Can you quantify that impact? Will you have to review your GDP targets or any of the targets you've set for the year?
Well, it's too early to say, really, and it's difficult to quantify at this point. Clearly, the tourism sector, which was doing extremely well. As you know, the Lonely Planet Guide ranked Sri Lanka #1. And we saw a significant improvement in terms of tourist arrivals and earnings last year. And the bookings this year have so far been very good. And undoubtedly, that will get affected. However, the tourism sector, the hospitality sector, over the 30 years, have gained a great deal of experience and expertise in how to keep people safe. So those drills and process and procedures will be kicked off again. They will be put back in place. And I'm confident that we can provide security for those people who will be visiting Sri Lanka, and that is already happening. You can see the systems that were in place in the country in the past are already being brought back in, and I'm confident that we will be able to cope with the situation going forward. But of course, there will be a hit to tourism. Beyond that, at the moment, it's difficult to see what. Yes. Go ahead.
Governor, Sri Lanka tapped $1.5 billion from the IMF. It also tapped the bond market in a huge way. What do you make of its debt obligations? Can Sri Lanka continue to fulfill its debt obligations for the year?
Yes, we certainly can. We have actually effected much of the obligations that need to be met this year were front-loaded into the first quarter of this year. More than enough. The obligations that had to be met this year, including 2 sovereign bond repayments of $1 billion in January and $500 million in April, have already been paid. So we have gone to the market, we've raised the money we require, and we may tap the markets again. We'll have to see how the conditions are, clearly. But as I said, the macroeconomic fundamentals are very much intact. We had stress last year, like a number of other countries in the emerging market space, by the combination of what's happened with the U.S. Fed, oil prices, etc., as well as remedial action taken by the authorities in Sri Lanka, the government and the central bank, has meant that our macro fundamentals are in a very good place at the moment. So that is a good foundation from which to absorb this shock. And I'm fairly confident that we'll be able to do so. Sri Lanka has never missed a single payment on its external debt obligations, and we are confident. We have just completed a medium-term debt strategy in close consultation with the IMF and the World Bank. So we have clarity in the way we want to go forward. We've also introduced a new Liability Management Act, which will give greater flexibility to the government and the central bank to raise money and to build buffers. To meet its external debt. So we feel the combination of the new Active Liability Management Act and the medium-term debt strategy has placed us in a good position to see our way through in terms of meeting our obligations.
Governor, hold on a second. Just want to bring the latest when it comes to what police in Sri Lanka are saying right now. They have detained 24 people for questioning over these bombings. Of course, there is still a lot of questions about the motive behind this. We've talked about how these were targeted towards high-end hotels as well as churches, which is very different from the tensions we saw in this civil war dating that lasted for 30 years or so. But Governor, I just want to bring it back to your realm here right now. What is a central bank going to do to maintain confidence in the currency in particular? We know that markets are closed, but are you planning any kind of contingency measures here ahead of this reopen to try to stem the potential outflows?
Well, we will monitor the situation very carefully, but as I said, we've raised a fair amount of money recently, $2.4 billion US. Our reserves of $7.7 billion USD gives us about a little over 4 months of import cover. So we have a little bit of a buffer. And in terms of money that could go out quickly, clearly there could be money that might go out from the government securities market. But that is a manageable amount. The total amount is $900 million. I don't foresee, all of it going out for sure, but some of it may go out. But what I would urge people to do is to look through this event or the series of events and to look at the fundamentals of the economy and the potential of the economy. Given our location, we are 20 miles from the fastest growing large economy. We are smack bang, that is India. We are smack bang in the middle of China's maritime Silk Route. We have excellent relations with everybody. The U.S. and Europe are our major trading partners, and we have very good relations there. So in a sense, our location, our international relations create things that we can leverage upon, and the future of the country and the prospects of the country are extremely robust. So I think one needs to look through this and to look at the potential of the country, and long-term investors who are in the country should look at that potential, see that potential, look at what the fundamentals of the economy are like, and look at the policies that are being put in place. We are creating frameworks for macroeconomic policy making, which will give us good macro fundamentals on a sustained basis in the future. There's a new Monetary Law Act, which will give the central bank greater autonomy and accountability. Sure. We are modernizing our Banking Act. So there's a whole swathe of things that are being conducted or being implemented at the moment to strengthen the economy in the medium to long term. This is definitely a blip. I'm not trying to hide that, but we can get through this.
No, we understand. Governor, does that mean that you can continue to hold back on cutting rates? At what point do you think that you need to actually consider easing?
Well, this is something that the Monetary Board, in fact, the Monetary Board is meeting today. We had a scheduled meeting, and we will go ahead with that meeting. The next monetary policy review is at the end of May. It's in about 5 weeks' time. I think the Monetary Board will look at everything. Clearly, at the moment, the trade deficit has improved significantly. Inflation is within the target. Real and nominal interest rates are rather high. Output is below potential. So there are, and also the external environment is putting less pressure on the currency and on our reserves. So taken all that together, there is a case for relaxing monetary policy. But at the same time, during the course of this week, we will be announcing certain measures which will result in a reduction in market interest rates. The central bank is going to give a little bit of leeway in terms of IFRS. I mean, it's really the chartered accountants in Sri Lanka will give a little bit of leeway in terms of the implementation of IFRS 9 in relation to small and medium economies for a period of time. In addition, go ahead.
Governor, can I just jump in here very quickly? We're seeing oil rising about 2% today alone. How concerned are you about oil prices and its possible impact on the Sri Lankan economy?
Clearly, as an oil importing country, the oil price is a very sensitive variable as far as the economy is concerned. But the prices at this level are manageable. I don't foresee a significant increase in prices. I mean, a lot of the commentators, who are experts in the oil market, seem to think that the price is unlikely to go much above the current levels. And it's not in the interest of the producers or the consumers for the price to go much above this level. So this is a level we can manage with.